Welcome back to your home of financial freedom. My name is Belin. In today's episode, we are going to be discussing 5 golden rules of investing in stocks or investing in shares, if you like to call it that way. Now, investing in shares can be such a rewarding investment. At the same time, it can be so daunting. Now, you need to be quite strategic in how you go about your investment in shares. Whether you're just beginning your journey in investment or you had begun already but you are yet to master the trades, then this video is for you. Before we proceed, press the subscribe button if you haven't subscribed, and to those who have subscribed, asante sana. Now, the first rule, the very first rule of investing in stocks is you need to have an objective. You need to set your goals straight. What do you need to achieve? Why are you investing in shares in the first place? Why are you investing in stocks? Are you looking at earning passive income, or are you looking at wealth growth? Right? So if you're going in for wealth growth, then you need to go in for you need to have a long-term objective. If you're going in for passive income, you want to earn dividends, then you need to be specific and strategic at choosing the dividend stocks. These are the companies that pay out good dividends every year, right? Some companies actually pays out dividends like twice a year. They have interim dividends and then they have the final dividends. So if you're going in for passive income, you need to be strategic at choosing these dividend stocks, right? Another strategy is to perform a good background check. Don't just go in because people are buying these shares or because you have seen a company is declaring dividends and now you dash into that company to buy those stocks. Perform a background check. What is this company offering? What products are they selling? Is it in manufacturing? Is it in banking? If it is in banking, what has their balance sheet been like? What's their core capital? Is there any signs of growth? What's their NPL ratio like? If it's in manufacturing, what are they manufacturing? Is this a product that can be consumed year in, year out, and 20 years later, and 30 years later? Or is it a product that is likely to be overcome by time and become obsolete? So it is important that you perform background checks for the companies that you need to invest in. Has this company been paying dividends? Is there any potential for growth? Is there any potential for share price increase in this company? Does it have any intrinsic value? Does the shares have any intrinsic value? Now, something else that you need to be looking at is something I have talked about in almost all my videos: diversification. What's diversification? Diversification is when you spread out your risk. It may not maximize your returns, but it will minimize your losses. It might not maximize your returns, but it will always minimize your losses, because through diversification, you are spreading out your risks, okay? So diversification is when you invest in shares you can diversify across industries by investing in different stocks of different companies which are in different industries. This is banking, insurance, manufacturing, telecommunication, agriculture. You see what I'm doing? You invest in companies in different industries, so that if one industry is affected, you have your investment in other industries which can potentially still earn you higher returns. Now, you can also diversify across different asset classes. You have special funds, you have money market, you have, I don't consider SACCOs investment, sorry. You have special funds, you have MMF, you have shares, you have bonds, you have ETFs, you have equity funds, bond funds, and so on. In fact, if you have been looking at my series for investments in special funds and investment in money market funds, you must have seen that some of these special funds, these collective investment schemes, they also invest in other collective investment schemes, that is diversification. In case their portfolio goes wrong or they don't maximize the return on their portfolios, they have the returns that they'll be earning from their investment in other collective investment scheme. So if this professional fund manager will diversify by giving other professional fund managers, their competitors rather, money to invest on their behalf. Remember, this is your money. And they're diversifying to that extent. And that other professional fund manager has also diversified. I don't know if you're seeing what I'm doing here with diversification. You give fund ABCD your money to invest, and this fund ABCD diversifies in different portfolios, in different assets, and part of this diversification is giving another fund manager which has also diversified, and this other fund manager through its diversification has also given somebody else to diversify. That is how much you need to spread out your risk. All right? Now, over and above diversifying across different asset classes, you also need to diversify in different economies. And this is where the special funds come in if you don't have the ability to invest offshore as yet, right? Now, another rule, golden rule that you need to follow is a repeat and expand. Now, repeat and expand means that a stock market, it thrives on a pattern. For instance, we know companies pay dividends. Just about the time when they're about to be paying dividends, or just when they have declared dividends, we normally see the stock prices rising, right? Then after the dividend payouts, the stock prices drops. So if you're into investing in shares for long term, then you have a clue on when you need to be buying your shares, all right? Especially if you're buying in bulk. At the same time, I had told you before that there's an inverse relationship between stock prices and interest rates. I told you, but because the interest rates were coming down, we were expecting the share prices to increase. There is an inverse relationship between interest rates and stock prices. And what happened to the stock prices? We have seen stock prices increasing. And investors who had onboarded the stocks, or investors who were holding stocks earlier last year and now have made capital gains in stocks. So if you have this knowledge already, or if you had watched my video back then when I told you that stock prices are expected to increase, you have certainly made some capital gains in some of the stocks that you are holding, right? So you need to study, repeat and expand is a rule, yeah? Repeat by meaning that you need to study the markets. They have patterns. Know the pattern. It's a repetitive pattern more often than not. Master that pattern and take advantage of it. All right? Now, the last rule is discipline. Stock investment requires the highest level of discipline. Indiscipline can make you lose your wealth. You need a lot of discipline. Once you have set your objective, follow it to the latter. Of course, if you study the market and you realize that it's not conducive, then you are allowed to alter it a little, because you always need to be reviewing your objective, by the way. But the stock market requires discipline. You need to avoid following hot topics. You don't need to react to daily market fluctuations because you're holding these stocks and now the shares have come down, now you're on board that shares. Or because Berlin said that stock prices are going to increase, shares are expected to increase, now you jump into the stock market and just buy any shares because Berlin said that shares are going to increase, share prices are going to increase. Yes, indeed, they have increased, but have you done a background check for that specific company that you're investing in? Did you have a plan of investing in shares in the first place before I said that share prices are going to increase? Right? So you need to maintain a very high level of discipline. If you're into the dollar cost averaging investing method, are you buying shares monthly, like you had initially planned. So these are some of the stock investment rules that you can follow in order to maximize your portfolio and to maximize your return on investment. Which of these rules have you tried and worked for you? Or which other investment rules are you using? Finally, thank you for joining your home of financial freedom. My name is Berlin. Let's meet on the next video.